morning traders, Richard here doing quick Ichimoku cloud chart market review of the S&P 500 index. We'll start with a monthly cloud chart just to get a big picture perspective. The current rebound rally that started when it found support at the front end of the cloud here 3,500 back in the fourth quarter of 2022. Then started to grind higher, managed to break past the front end cloud chart resistance zone here between 4,000 and 4,037, and now it met its match with upside resistance here on the weekly. We'll see that in a minute. And the ultimate upside resistance target on the monthly is 4,547, or 4,550 roughly. Just take that number there. So we've had a fantastic rebound rally from the front end cloud chart support level. Now the rally is running into alt cloud chart resistance zones. So be aware of that these are the upside resistance targets on the monthly Ichimoku. Turn to the weekly Ichimoku chart. Let's make this a bit bigger. There we go. So yeah, the fantastic recent swing trade rebound rally that started here up on the standard line of the cloud here. This bottom cloud chart support zone, which also corresponds with the front end cloud chart support zone. And then the market did manage to rebound from there, broke through the bottom end cloud chart resistance, broke through front end cloud chart resistance of 4,066, and then struggled for a couple of weeks to get past this 4,157 front end cloud chart resistance zone, top end cloud chart resistance zone, front and top here, and then managed to break through that after a couple of weeks. Just a fantastic strong breakout through there. That then activated the upside resistance targets of 4,315, 4,420 and 4,436, and then the market ran into with a nice climatic run up here, ran into trouble here with these resistance zones on the weekly chart. You can see there 4,547 is the monthly cloud chart resistance zone to the upside, as well as these other resistance levels there, 4,523 and the top end of the cloud here, the ultimate resistance zone. But the market's now consolidating. It's running into significant resistance here. It's taking a bit of a pause, but the good news is on the weekly Ichimoku cloud, we're back above the top end of the cloud, which is bullish, but there are downside risks. The turning line of the cloud here is the first level of downside support, 4,248. The next level is the front end of the cloud, once again 4,184, and then by this time the standard line would have caught up, and that's more or less going to be around the 4,157 zone. So these are the downside risk targets in a period of seasonal weakness. We're not sure how July, August, September and October is going to go. Maybe the market's going to retest these resistance levels, only to be overpowered by resistance, and then drift lower to retest these levels in the September-October lows of the year. So keep an eye on that. These are the downside risk targets if the top end resistance holds at these elevated levels. Turning to the daily Ichimoku, just get that one on the chart there. You can see how the market became a little bit extended from the top end of the cloud. We look at the distance between the price action and the top end of the cloud here. And so the market's consolidating now on its way to test this turning line of the cloud here, 4,388, to see if that resistance will hold, or will that become a new support zone. You can see we've got very close to rebounding from the front end cloud chart support level of 4,315. So these are the levels to watch out for. 4,315 is a support zone on the daily, as well as the turning line, the standard line of the cloud here, 4,276, and 4,248, the front end of the cloud here. These are the downside support targets if this consolidation lasts a few more days. You can note how they managed did not manage to break past these top end cloud chart resistance levels. So the market became quite extended. This comes after a nice cloud chart cross buy signal here, a nice strong rally, another secondary buy signal here from Ichimoku cloud chart perspective. So we had two fantastic swing trades, April, May and June, and now the market's consolidating a little bit with downside risk targets to the top end of the front end of the cloud, the standard line, and the bottom end of the front end of the cloud. So these are the levels to watch out for. Now if we get a retest of these resistance zones and the market managed to break past these resistance levels, watch out for these 4,466, 4,523 upside resistance targets on the daily. Turning to the 4-hour Ichimoku, there we go. You can see how extended the market became from the top end of the cloud here. Let me just refresh the data. There we go. See how extended it became from the top end of the cloud. Now on the 4 hour, the front end cloud chart support zones are 4276, roughly that zone there. So this swing trade from these cloud chart rebound here, cloud chart buy signal there on the 4 hour, all reached our profit targets when it hit these resistance levels that we get from the daily and the weekly Ichimoku. But now downside risk targets, the front end, the cloud here, dangerously close to generating a sell signal here, so it'll be interesting to see if we're going to get a continuation of this rebound here from the turning line and standard line there. But these are the old risk targets to the upside, downside support targets, front end of the cloud, and we mark as a bit of at risk consolidating after becoming very extended from the top end of the cloud. Turning to the hourly, fantastic cloud chart cross swing trade there, and a secondary cloud chart buy signal for that move, and then a few other buy signals for this rally. And now the market became quite extended on the hourly. Price action is very far away from the top end of the cloud, and then it's consolidated back down to the front end of the cloud support, tested that zone. But now, briefly, for a couple of hours, the market was in bearish territory on the hourly Ichimoku. Now it's running into resistance at the top end of the cloud. Yes, it's critical for the market to close back above this top end of the cloud. If it fails and closes below the cloud and trade in this cloud chart zone, then the hourly is still bearish. So the hourly is at a critical juncture. Will it break out there, break out past the cloud chart resistance to be back in bullish territory? Price action above the cloud is bullish, price action below the cloud is bearish. So watch out the hourly one, give you some indication that the 4 hour consolidation might take a little bit longer, and that we might see these levels being tested, yeah, the front end of the cloud. But so far price action is still above the top end of the cloud on the 4 hour, that's bullish. Daily is still very bullish with downside risk to the front end cloud chart support levels between the standard line here and the front end of the cloud at 4248. Until next time, happy cloud chart trading. Bye for now.